just when it seemed like things were stabilizing, news of Supertech's loan defaults broke out and there was massive sell-off in the markets on Wednesday. Now, there are many NBFCs which are exposed to Supertech, and Ravi Krishnan joins us here to help us understand how these NBFCs will be affected by this particular development. So, Ravi, do tell us what are the implications for NBFCs now that Supertech has defaulted on its loans?
See, NBFCs were already facing funding problems.
Right.
Now that Supertech has defaulted and there are fears that others like it also might default, there will be asset quality problems also for NBFCs. So it could lead to contagion risks. If asset quality problems increase, then they will have to set aside more money as provisioning. Their earnings will be affected. That will also curtail their ability to lend further. So that is one main risk that is emerging.
Okay, so asset quality will be affected and lending will be curtailed. So why are NBFCs facing a liquidity crisis?
See, there is a fundamental problem in this NBFC business model, which is that these short-term borrowings are their main source of funding, while the money they advance, those are more of long-term kind of loans. So there is an asset-liability mismatch. So what has happened after the ILNFS default is there is a little bit of panic in the market. There have been large outflows from mutual funds, liquid mutual funds, debt mutual funds in the last couple of months. So because of this, one main source of funding for NBFCs has been constrained, which is the mutual fund channel, because many mutual funds are kind of maxed out on how much exposure they can take to the NBFC sector. As far as banks are concerned, banks have been a good source and there are no rollover risks or anything which is associated with them. But still, banks will now, because of all these problems, tend to be more selective, in funding to NBFCs or buying assets from them.
Right. So as of now, NBFCs have nowhere to turn to.
I wouldn't put it exactly like that, in the sense that we'll have to see how they can tide over this liquidity problem, say in the next month. RBI, for example, could open a refinancing window. So there are solutions. RBI could restore some confidence in the market. But that said, there is a chance that they will have to tweak their business models. They will bring down lending a bit more. It won't be at such a fast pace as what we have observed for the last half decade. Because of that, I think there could be an impact on economic growth as well.
So NBFCs will definitely have to change their lending models. Lending will be curtailed. The RBI could come up with some solutions. However, this will definitely affect the growth in the coming months.